All right, everyone. Bismillahirrahmanirrahim. Assalamu alaikum, everyone. My name is Yasir Yamin, and I welcome you all in this session. My friends, we are again here to practice something about SBR. Now, SBR is a very good paper, I tell you. But sometimes, examination is structured in a manner that you get confused. Sometimes questions come in a manner that you're not very comfortable about it. And we need to make sure that we stick to our guns. If anybody was to ask me, sir, that at the very least tell us some formula or some technique to have a good score in this particular exam, the minimum that you could do while going for your exam is that you should, at the very least, stick to your own content. The content that has been delivered to you, the lectures that have been delivered to you, the accounting standard information that has been delivered to you, at the very least, you should stick to it. Many a times, what students do is they spend a lot of time, trying to practice a lot of exam kit and a lot of questions, but at the same time, they are not very secure in terms of the lectures content, the IS and IFRS. And believe you me, when that's the case, there are less chances of you passing. And why is that? Because, the past paper solutions and the practice that you do does help you, but only up to a certain extent. Because at the end of the day, when you go into your exam, the question paper is going to be something new, and it won't be out of your exam kit or a past paper. Your paper will become a past paper for somebody else. And that's the point. You need to be exam ready in terms of the knowledge that we have provided you, in terms of the knowledge that ACCA requires as a standard to pass any paper. But the examination pattern or the exam past papers or only the questions are never a benchmark. Okay. Now, regardless of whatever I said, still we are going to practice some more. In today's session, we'll be practicing a past paper, which is from the very recent past. It is a past paper from December 2023 attempt. This is question number 2 that we are practicing. And now we know that in question number 2, primarily accounting implications come, but at least one part of that exam question, question number 2, always contains few marks for ethics portion. All right. And I always say that ethics portion is relatively an easier portion as compared to the other, the remaining whole paper. It can give you solid free funded marks. You just need to gain them. So let's begin. In this scenario, examiner says Dario company is a pharmaceutical company. The financial year end of Dario company is 31st of December 2007. I always recommend to everyone out there that always highlight your accounting year ends. Examiner says the following exhibits available on the left hand side of the screen, and these are 2 exhibits in this scenario, provide information which is relevant to the question. Now, there are 2 exhibits, and these 2 exhibits will relate to. The first exhibit is about ethical considerations. So at the very least, you know that first part of your examination is purely ethical considerations. This describes the ethical issues surrounding Dario company. So Dario company is a company, and there may be a range of ethical issues, and you need to discuss those ethical issues, most likely give some conclusions or remedy or anything which your examiner requires. Then your examiner wants you to talk on operating segments. Operating segments area describes the potential operating segments in Dario company. This information should be used to answer the question requirements within the chosen response options provided. Now, I always recommend to students that even before jumping onto the case scenario, you can, as a shortcut, you can go to the requirement and do not read all of the requirements. It won't be of any use. What you can do is just read the first requirement. And in this case, we have been given 2 requirements. The first requirement A is of in total 12 marks, where ethics portion will be covered. So you'll be most likely you'll be getting another 2 professional marks as a plus. And then in requirement B, it is 8 marks, and this relates to IFRS 8. All right. So we'll just focus on the first case. It says that using exhibit number 1, so not exhibit 2, exhibit 1, discuss the ethical issues caused by the current business situation. This is 10 marks and plus 2 marks for for being a professional. All right. Now I just need to discuss the ethical issues. Now, guys, it should be very clear while we read the scenario that I want feedback from you. I'm not here in this session just to talk, talk, and talk. That's not the way we can really make ourselves ready for our examination. Now, some of you might feel, sir, that why do I put in so much effort and read the scenario with you right now? And why do I reply you? I mean, I can just sit back and listen to other people and listen to you while you explain everything. But the thing is, I'm not going to go in your exam. I need to have a pulse check right now that if you're ready for the examination or not. And that is why I want your, feedback then and there. As if you're reading this question for the first time, and thereon you need to come up with the ideas and come up with the answer by yourself. Whatever it is, I won't judge you on it. All right. You can be wrong. I would, make fun of you might be, but I won't take it as something bad. All right. Let's continue. So our examiner says the finance director of Dario company is not a permanent employee, but is paid on a consultancy basis. So just imagine for yourself that you are hired to a very renowned company. Let's say you are hired to PwC. You're hired to PwC, and you must be very happy because it's one of the highly regarded audit firms or accounting firms available. You get hired to PwC, but you get hired on a contractual basis. So on a contractual basis mean that you are here for the service period which has been defined to you by the employer, and thereon you will have to leave. So, some people, what they would do, they would work so hard in this, contractual period so that the entity gets motivated and hire them permanently. Yeah. So this would be your mindset. Now, it's very important to note the mindset. Why? Because thereon you will create ethical implications out of the scenario. So the finance director of Dario company is not a permanent employee, but is paid on a consultancy basis. He is currently on a 6-month contract. So he's currently on a 6-month contract only. The chief executive officer is a personal friend of the finance director. So first of all, you have been hired in a company on a consultancy basis. By the way, to me, this is of a surprise. And why is this of a surprise? Can you imagine a company which is without a CFO, which is without a finance director? I mean, nobody hires a CEO or a finance director on a contractual basis. I mean, why would you do that? That person who's working on a consultancy basis will never work so hard as compared to a full-time employee because he is, morally, ethically, financially, inclined towards you. But if you're paying a person on a contractual basis, he would have his own viewpoint and how much effort should he be providing to the company. And moreover, the chief executive officer is the personal friend of the finance director, and she recommended him to the board of Dario company. Can you find any risk here? Do you find any ethical risk here? Beware of the fact that we are in an ethics question primarily. Very good, everyone. We have seen that there is a familiarity threat. There is a clear forward familiarity threat. Familiarity threat is the threat that when you are in a close relationship with someone, either it be in terms of being a family member or a close friend, the accountant may feel sympathetic to the wrongdoings of the other person, and therefore his objectivity may be impaired as well. Make sense? So that's the point of view that I want to give you. The finance director and the CEO are both ACCA members. What do you get out of this? If both people are the members of ACCA, one thing should be common for both of them as far as ethics is concerned. What thing would be common? Very good. They both should abide by the code of ethics. They both have to follow code of ethics. Do you all remember what were the 5 principles under code of ethics? Do you all remember? Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. So these 5 principles everyone needs to follow. Every ACCA person definitely needs to follow. Let's move on. Now, your examiner says that Dario company currently has a cash flow problem And the CEO has asked the finance director if he is prepared to reduce his current fee by 50%. So, at the very least, I've got two answers to my previous question. I was concerned that why would a finance director who is integral to the business success, why would he be hired on a consultancy basis? Now, there are two answers to it. First of all, your CEO is also an ACCA member. So she must be very well versed with the accounting principles and accounting knowledge, right? So that's already taken care of, even if the finance director was not officially there. I mean, she could have, handled each and every situation by her own self. Moreover, you know, why that person would only be hired for a 6 month period on a contractual basis. This might be because that Dario company is facing a cash flow problem. They don't have money to pay. And that is why they have even asked the finance director if he is prepared to reduce his fee by 50%, making it half. Making it half. And the fact that finance director's contract is also due for renewal in the next month. Do you see any ethical risk here? Do you see any ethical risk here? I see it for sure. Yes, there is a clear risk of self interest. Just imagine what the finance director would be in a position. She has a close family member in a company. She has a close relationship with the company CEO who recommended him to the board. So she's the one who hired him. Then his contract is only of 6 months, and that is about to get a renewal, next month. So CEO again has to recommend to the board that hire this person as a finance director. So again, he would be inclined towards the proposals and recommendations of the CEO. The CEO has asked him to kindly reduce his fee by 50% because the company has cash flow problems. So the CEO would not be in a very good position because she already sees that company is not performing very well, cash flow is already short, and therefore there might be a scenario that she wants to justify her own her own decision to hire this finance director on a consultancy basis. Now she might have realized that that might be we are not getting too many benefits out of this finance director. We are still facing cash flow problems. And when I go to the board in next month's board meeting, everyone would ask me that how does it make sense? The company is already running out of cash. The company is burning out money. And thereon, you have hired a so expensive person as a finance director who is being paid X amounts of money, and that is too much. So don't you think that the CEO herself is in a self-review is exposed to a self-review threat, and she wants to revisit her decision, and that is why she has requested the finance director to reduce his fee. And thereon, if you see from the perspective of the finance director is under an intimidation threat. Why? Because he is under undue influence of the CEO who has to recommend him again to the board. He might lose his job. So there is a clear conflict of interest between the interest of the entity and the interest of what finance director wants. Yeah, so yes, Hadia, exactly. She's trying to validate her decision. Yeah. So, do you understand the ethical implications that are here? And what do you expect the finance director to do? I mean, there is a risk that finance director might lose his objectivity. He might come under the undue influence of his boss, or he might be exposed to conflict of interest, and thereon listen to whatever the CEO says at this point in time. But he should maintain his objectivity and integrity. He should be straightforward and honest in all his business and professional relationships. He should make clear what he is worth and what he needs to be paid contractually. And at the same time, he should make sure that he does not compromise on his objectivity. That is by not allowing any undue influence of others or biasness or conflict of interest, come in the way of his professional or business judgments. That is required. Right? So let's move forward. It says the CEO has recently spoken to the finance director and stated that his contract is more likely to be renewed if he is prepared to take a fee reduction. She has also said that if he needs support, then as a friend, she will help him. Now, this confuses me again. You see, the CEO, I'm just assuming this in a real life situation. The CEO, who is your friend, is saying that, you see, I cannot justify to the board that why I am paying you so much. You are a close friend of mine. I'm paying you so much, and the company is running under a cash flow problem. She is trying to validate her decision, but the company is already on waters. But she knows that the finance director is worth more, and that is why she must be offering some, some support on a personal basis, not on a professional basis, but on a personal basis. She says, okay, don't worry, I might give you some sort of money from my own pocket, but I cannot give you that money from the company's bank account. Again, if the finance director compromises his objectivity here, he might take that offer. He will take the contract renewal, take some money behind the books from the CEO and agree to a 50% fee reduction. But he needs to maintain his integrity, and he needs to go to the CFO and have a clear conversation that we need to have a clear contract, because this is a professional relationship, and therefore we cannot lose our integrity as we both are ACCA members, right? So if you read the question slow, how many points do you get in your mind? Yeah. It says the finance director is upset. Why wouldn't he be? The finance director is upset by the fee request as no other director has taken a cut in their salary. Maybe because nobody is earning so much as the finance director is. He is currently undertaking a going concern review of Dario company. Just imagine, you are already in waters, there is an intimidation threat by the other person, and you are reviewing the going concern status of the entity because the entity is running under a severe cash flow problem, but has decided not to complete his report until he has considered his position with Dario company. Do you find any problems here? The finance director is saying that, you see, there is always tit for tat. You don't renew my contract on full fee, I'll make sure that I won't give you the required report, which is based on the going concern review. Premlata, I think there is one more area that you need to touch here. He is not providing a going concern report. Is he not providing going concern report due to his professional competence? Does he not know how to prepare a going concern report? That's not written. Is he not being professional enough to prepare a going concern report? That's not the case. Yes, you can call it, the case of integrity, or you can call it the absence of professional behavior. To him, to think like that is not a wise option. I mean, the financial statements are based on the going concern review. The audit is done based on the going concern review. Your banks, your partners, your suppliers, your customers, your employees, all stakeholders are connected with the entity, and that all depends on the going concern review. Now, if he decides that since he's not going to continue with the business and therefore he will not do his pending job and not provide a going concern review report on a timely basis, don't you think that, a situation like this will will discredit the profession? Anyone watching this accountant from the backside would say this is against professional behavior. I mean, you must do anything which is important, despite the fact that you might not get your contract renewed next month. This is something which is related to professional behavior. Then the finance director's findings will also form part of a submission to the government for funding and will be shared with the external auditors. So basically, why he is performing the going concern review? Because that going concern review report will be shared with the external auditors, because based on that, they will be preparing their audit report, and they will be, considering this going concern review status as well. Furthermore, the going concern review report will be provided to the government because the government might be funding you. So, the report needs to reflect a true and fair view of the entity's affairs. If that's not the case, it's against integrity. You have to be straightforward and honest in all your business and professional relationships. You can just not say, I won't do it because I don't like it. That doesn't make any sense. He knows that the current cash flow position would indicate that the company is not a going concern. Voila. And that if he submitted the report, there would be no government funding. I mean, why would government fund a company who is in or who is already in excess, in terms of their liabilities as compared to their assets? Why would government fund that company? Yeah. And if he does give that company, right, Basam, if he does give that opinion, he might lose his job eventually. There is also the possibility that financial statements would receive a qualified audit report because the company is not in going concern. He is considering overstating future potential return on investments just to make sure that the company stays a going concern. Is that the right thing to do? Is there any ethical concern here? He's trying to inflate future potential return on investments. That is clearly an integrity issue. He's not being straightforward and honest with the stakeholders. The government could make a wrong decision. The shareholders could make a wrong decision based on his going concern review report. The external auditor's opinion could change as a result of his going concern review report. And at the same time, objectivity is being impaired as well, because all of what he's trying to do, it arises just due to his own biasness or conflict of interest. He just wants to get his contract renewed. Yeah. So he's all doing this under undue influence. Now, somebody said that this can also lead to advocacy threat. Yes. Yeah. You see, advocacy means that when you are supporting, you are unduly supporting a client or an employer beyond what level you should be doing. I mean, if you are trying to inflate future return on investments, you are not being transparent, you're not being true and fair with regards to the company's affairs. That means that you are trying to advocate the company's future unfairly. You're trying to advocate to everybody else that, okay, believe you should believe me, the company is going to be okay. You're being an advocate of the company. And whenever you try to become an advocate of anyone, you become impartial. Nobody would trust you. The other day I was giving an example to one of my students. And that was just, for example, Bassam. I'll take Bassam for example. So Bassam, just imagine that you see, you go in a courtroom, there is a person who is accused. And let's say, unfortunately, you are the victim. So you go towards the courtroom. There, in one chamber is basically the accused person, and the other person is you, who is the victim. And then the judge came. When the judge comes into the courtroom, you expect the judge to be impartial. He should look impartial. And, if he's impartial, if he's neutral, if he's independent, he will listen to the court case independently, and then he will make the right decision with all neutrality. Just imagine the judge comes into the courtroom and he praises the accused like any other. He says, I've heard so much about you. You're a very good businessman. You have so much money, and so on and so forth. And when he's done, he says, now we can begin with the proceedings. As a victim, what would you feel? Now, there is a good chance that the judge may ultimately take a neutral decision on a neutrality basis. But would you be satisfied? Because you will have a perception that this person is being an advocate of the accused person. Whatever decision he takes, you won't be satisfied because of the act that he did. And deep pockets. So the same thing I'm trying to tell you. As an accountant, you need to stay impartial. Whenever you are required to report a financial, even though you are working for the company, if the company gets government funding, that's good. If the company gets an unqualified audit opinion, that's good. But still, you need to represent yourself as an impartial person at all times, because your utmost duty is to present the financial statements in a true and fair manner. And if you and if you get yourself involved in advocacy, then nobody will perceive you as being unbiased. That you should always maintain. All right. I'll move forward. It says that in addition, many of the accounting staff are remote employees. First of all, you should point this out that this area is in addition. So, whatever we discuss in this paragraph is in addition to the happenings that have already been done above. So, in addition, many of the accounting staff are remote employees, which is the new normal nowadays, meaning that they are now working at home rather than working at office. All right. I've seen it globally, that's happening. The lease rentals have come down because of this. Nobody comes to the office nowadays. Only us Pakistanis do. The finance director is worried about the possibility of data theft. Actually, just tell me, the finance director is worried about cyber security and data theft. Is it a good thing to worry about? Is he being correct here? Should he worry about data theft as an accountant? Yes. I mean, even though he's not an IT person, you are not supposed to be an IT person, but I mean, you're a watchdog, right? And you have confidential information. Your colleagues in the finance department would have access to confidential information, and you would always want that data to be secure. And if you see that there is a potential for data theft, you must be concerned. That's the right thing to do. Unfortunately, he does not have the skills, nor does Dairo company have the capacity to undertake a widespread investigation into the issue. Do you see any ethical risk here? The finance director does not have the skills, nor Dario company has the professional capacity to ensure that there is no data theft. Do you see any issue here? I certainly see an issue. There is an issue of professional competence and at the same time of due care. You see, most of the time, accountants, and if you're a finance director in particular, maybe you are not an IT guy, but still you have to implement such controls and a governance structure that ensures that cyber security is there. As an accountant, you need to be aware of the happenings, of the digital advancements that are happening nowadays. I also uploaded a technical article about it. Your examiner has published a technical article about it. You see, these times you need to be well aware of the digital happenings that are nowadays, and the accountant needs to be aware of these. Though he is not an IT person, but he could have consulted towards an IT guy. He should have created enough finance provision within the company so that he could support an IT transition. Somebody could take that role and make sure that data theft is not happening. So an accountant, as with regards to professional competence and at the same time, keeping due care, he is under an ethical risk, right? Moving forward, given the current request to reduce his fee and the cash flow situation, he does not have an incentive to deal with the potential data theft or inform the board to enable them to address any potential problem. Do you see any problem here, guys? He sees that, okay, my company does not have money. Even they are asking me to reduce my fee. He does not see any capacity for improvement. But at least being impartial, being neutral, being maintaining integrity about the situation. He should have been straightforward and honest in his business relationship. He should have made a key decision to notify the board about the potential risks that are underlying. Is he maintaining his integrity right now? No. He does not have the motivation to even inform the board of directors. Is he being objective about it? Because he sees that there is a fee reduction of mine. I don't care. He's being careless. I always tell each and every person who works with me, I always say to my colleagues, my subordinates, my partners, I always say one thing. It's okay to be less competent, but it's not okay to be careless. So even though you are under undue influence of others, even though there is a clear conflict of interest, you cannot be careless. You cannot say that I don't have the motivation to at least notify the board. Here you are being biased. And that's against the principle of objectivity. Then it says that, however, he asked the information technology department. Oh, so there is an information technology department, by the way. He asked the information technology department to add productivity monitoring software to all remote employees' computers without their permission or knowledge. And any employee who spends time on non business websites, Allah maaf kare, will be immediately disciplined. Do you see any problem here? Any ethical issue? Achha, just let me know. Is applying productivity managing, monitoring software a bad thing? Is being concerned about employees' productivity and the company's output, is being concerned a bad thing? All of you, let me know. Is being concerned a bad thing? Absolutely not. I mean, it's your job to make sure that the company's inputs are kept to a minimum and the company gets the best output out of the resources that have been pulled in by the investors. Yeah. So that's the right thing. I mean, installing the productivity monitoring software within the systems of the employees, maybe that's not a bad thing. But it seems to be an unethical stance that he would be, taking disciplinary actions without even letting the employees know that your productivity is being monitored. The finance director is of the opinion that anyone who is found, using Facebook or YouTube or anything like that, they will be disciplined. Is that an ethical stance? Is that an ethical stance? I don't think so. I mean, this would be against professional behavior, na? Everyone would say, oh no, accountants are so stupid. They install something into our, laptops, and they are not even informing us that our productivity is being monitored. And plus they will discipline us. What do you mean by discipline? Somebody might lose his or her job, somebody might receive a pay cut or something like that. I mean, that's not fair. That's against the fairness principle, and that can discredit our profession if you come up with such ideas. Being concerned for productivity is not bad, but at least the accountant should have took the initiative. Being professionally competent, he should have took the initiative and informed it to the employees that from now on, from this time to this time, we'll be monitoring your productivity, and we'll be seeing if you're using anything else, and we would expect you to have at least 70 or 80% productivity at all times. I mean, that's the way to go about it. Make sense? All right, everyone. Is it okay? So, guys, now we have read the whole scenario. And now I would suggest that we jot out some points that I can only do with your help. Let us go to the requirement again. We just need to discuss the ethical issues caused by the current business situation. Now I just need some pointers for you guys regarding this case. All right, I'm not making a complete answer right now because it would take a lot of time, but at the very least what we can do at this moment in time is just make up some points. So I'll be writing the answer in the form of bullet points. Okay. So let's start from the very beginning, starting with finance director being friend of the CEO. Very good. So we can start here. The finance director is under a close friendship with the CEO, who also recommended him to the board. He is hired on a contractual basis, that is, that is not even permanent, and therefore an intimidation risk is present here. Intimidation means that the finance director may feel sympathetic or feel influenced by the CEO because he supported him to get this role, and she is her she is his close friend, right? So we have talked about intimidation threat. However, the accountant should not allow any biasness or undue influence of others to override his professional or business judgments, right? So much to write in this scenario. Let's look out for something else. One more point, Fiza. The finance director and the CEO are both ACCA members. So we should write this point as well. You guys know now what point we can make with regards to this case. It should be noted that FD and CEO are both ACCA members and are thereby obliged to follow the code of ethics as defined by ACCA. Do mention the word ACCA. Your examiner would be happy about it. All right. Let's move forward. I want point from you guys as well. So we studied that Dario company currently has a cash flow problem, and she asked the CEO to reduce his fee. The finance director's contract is due for renewal next month. And the CEO has said that his contract might be renewed next month if he's prepared to take a fee reduction. At the same time, she is ready to support him personally. We can write some points here. Yeah. The finance director has been offered a fee reduction against a possible contract renewal next month. So he would be compelled to listen to what CEO says, and thereby his objectivity may get impaired. Furthermore, it seems that CEO is exactly. It seems that CEO is faced with a self-review threat. She is trying to validate her earlier decision. She seems to be trying, because that's not confirmed. She seems to be trying to validate her earlier decision to hire an external consultant as the finance director. And now considering that there are cash flow issues, she might want to justify her earlier decision in front of the board. Make sense? Right? Moving forward. एक और बात, one more thing. Moreover, the fact that CEO has offered some personal support to the finance director indicates that he is worth the full money. He should not compromise on integrity. Yes, yes, self interest, but he has not agreed to it yet, right? He should not compromise on his integrity and be straightforward and honest, straightforward about his current and future contract with Dario company. Otherwise, his objectivity regarding his professional and business judgments may get impaired because of the potential for a renewal of his contract. Now, sometimes what happens is that you try to manipulate the situation or you try to convince the CEO that, okay, I don't want to take a 50% reduction in my fee. I can do something for you against which you can convince the board to restore my 100% fee, right? So there can be a malintention as well. And I would like to write one more point. Clearly, his self interest could be a risk. What type of person for accepting low fee? He might give some money from his own pocket. Makes sense. Huh? All right. The finance director is upset by the fee request, blah, blah, blah. He is currently undertaking a going concern review of Dario company, but has decided not to complete his report until he has considered his position with Dario company. Now, what point can we make here? The decision taken by FD to not complete his going concern review is against professional behavior. Considering the fact that this review report will be provided to the government for future funding, and the auditor, so that they can form an opinion about the company's affairs. The decision to delay can discredit the whole profession in front of the larger stakeholder group. Make sense? Then I remember somebody gave me a point. Next point about artificial accounting. Yes, exactly, the ROI increase. So I remember that, there was a case that he is considering overstating the future potentials, return on investments, blah, blah, blah. And, somebody talked about advocacy. I would want to discuss about advocacy here. The intention of the finance director to inflate future ROI is against, first of all, it's against professional competency and due care. Professional competency, as he seems to be unaware of the implications to it. There is clearly an advocacy threat as he aims to incorrectly or unfairly support the company's future plan. He should maintain his objectivity and not allow his self interest to override self interest or biasness to override his professional judgments. Make sense? Make sense? Yes. So override his professional judgments. Now moving forward, what can be the next point? Working from home. Oh, data theft. Yes, data theft. Accountants are considered to be watchdogs of watchdogs in the business. Though cybersecurity is an IT issue, but since finance director would be in a position to influence the control and governance mechanism within the entity, his lack of attention and interest to notify the board is against the principle of professional competency and due care. He should have been more aware of the potential data breach and should have notified the same with straightforwardness and integrity and straightforward and honesty, thereby maintaining integrity. Thank you. All right. Any other point that I could write? Oh, yes. Now we are left with that one particular area. What was that? Remind me, please. What was that? That was about, yes, productivity software. Yes. I can write, though monitoring productivity of employees is not a bad thing to do. However, taking disciplinary actions without even prior information to the board does not seem to be a fair decision. This would go against the principle of what? Of professional behavior. Make sense? All right. So, though initially I decided not to give you too many lines, but still, as part of my habit, I have drafted too much, I think. Remember, in your exam, you cannot write in bullet forms like I have done right now. In an exam scenario, you need to make sure that you construct your answer as your examiner requires you to do. You always need to make sure that you structure your answer in paragraph form and always segregate paragraphs as required. So, for example, if you're talking about cybersecurity, there needs to be a separate para for that. If you're talking about something like going concern report, there it needs to be discussed in a separate paragraph. And there, then only you will get 2 extra marks, being the professional marks which are allotted in your examination. I hope you have understand. Can you make different headings? You can. You can make different headings, but I don't think you will get any extra marks for it. Most likely you will be short on time already, right? So you won't be able to structure the question as better as we have done right now because we are sitting in our rooms. We are sitting in our homes. So though I allow you to make headings, but I'm very sure you won't get enough time in your exam. Your mind won't work with such freedom that you remember to make headings, though it's allowed. Is it not allowed to answer in bullet points? It is allowed by some to answer in bullet points, but then you'll have to go to the examination center at least twice. This one you will fail, and then you'll have to go again, and Allah na kare, you'll have to go there again. It's not allowed to answer this question in being straightforward and honest about it. It's not allowed. You won't get 2 professional marks for it. Although ACCA is very fair in terms of marking, they might provide you marks for each and every correct term that you have written, but you won't get the 2 additional marks. You won't get the 2 additional marks that are allotted as professional marks. You lose those marks. And sometimes 2 marks matter, I tell you, because I'm very sure you'll score 98 by your own efforts. These 2 marks are given by an examiner just to make sure that you achieve 100. Why let it go? All right. So write it in para form, please. Is it okay for everyone? Can I move forward? Thank you very much. Let's move on to part number B. And in part number B, I'll just see how many people are preparing for their examinations very correctly. Do you need to write any remedy as well? No, because the examiner required you to only discuss the ethical issues. There was no specific requirement to conclude it, right? Since it was not required, you don't need to write any conclusions or remedy here. All right. Point number B. Let's see, Premlata, if you can help me write this answer. Explain. Explain. Please explain. In accordance with the principles of IFRS 8 operating segments, whether divisions A, B, C, and D should be treated as separate reportable segments. Which IFRS is being tested here? It's written in front of you, IFRS 8 operating segments. So IFRS 8 has come into your exam, which is the last exam almost, December 2023, where 8 marks worth of IFRS 8 came. If you don't, get these marks, then I'm going to make sure though that you get too many very good messages from me. I'm telling you. These are straightforward marks, which is in question 2 of your examination paper. If I was there, I would try to achieve 9 out of 8. This should be done so clearly. So again, it says that explain in accordance with the principles of IFRS 8. Remember, whenever explain requirement comes, it is always a theoretical requirement. By theoretical, I mean that you always need to just explain the principles behind a particular accounting standard. What did the accounting standard say in this particular regard? And that's it. Nothing much. It's a relatively straightforward requirement. Your explanation should cover 3 areas: the definition of an operating segment, the aggregation of operating segments, the identification of reportable segments. If I were you, I'm telling you, even if you were there, you should have scored 9 out of 10. Thank you for remembering my YouTube video about IFRS 8. But clear-cut marks. I mean, these are the 8 marks that should at least come in your exam. Other 92 nobody can confirm, but at least these 8 should definitely come. I will make 3 headings: definition of operating segment, aggregation of operating segment, and I will make the third heading the identification of reportable segments. And while writing this answer, I would expect that you help me. If you don't help me, then it's not right. So let's go and write an answer. First, let me just say this is part B, and that would mean that we wrote some important pointers from YY. Okay. Then let's go for B. So B, by the way, we need to make 3 headings. First of all, the heading which was required by our examiner was the definition of an operating segment. We don't even need to read the question, read the exhibit for this, but still I'll go and read it. All right. I'll just make an heading here, which is about the definition of operating segments. Read the case study and then come back. And in the meanwhile, you can maybe revise your IFRS 8 and then let me know when I ask you for it. So let us just go and study. And by the way, before we even study, do you remember IFRS 8? Why don't I write the definition of operating segments part first so that at least you guys can remember? Do you guys remember what was IFRS 8 all about? What do you mean by operating segments? Just give me the first word and then I'll know that you know. Okay, somebody says companies with multiple type of business segments. Somebody says about CODM. There is definitely a definition for it. What? IFRS 8 defines an operating segment as a component of an entity that now tell me the pointers, please. Tell me the pointers. That engages in business activities, incur expenses and earn revenues over the normal course. Then its performance is regularly reviewed by the chief operating decision maker, who is the CODM, and for which discrete financial information is available. Make sense? So this was IFRS 8 operating segments. All right. Now let's go to the case and then just read something about it. Now, examiner says Dario company has 4 divisions A, B, C, and D. Can anybody tell me if there are 4 divisions in a company, how many maximum divisions can be identified as an operating segment? 1, 2, 3, or 4? You remember there was a requirement under IFRS 8 not to define operating segments more than 2. Do you remember that? How many of you remember that particular requirement? We cannot identify more than 2 operating segments. How many of you remember that? You guys must be going back to your notes and seeing where that is written. So bad. You won't find it because it's not written. There is no such requirement. I was just trying to test you guys. Just some days before the exam, I have a right to test you guys. There is no such requirements. All right. So it's a component of an entity. A company with 4 divisions can have, up to 4, for example, operating segments. That's fine. So we need to study each and every one of them and identify if they meet, first of all, the definition of operating segment or not. And then we'll go and see if they need to be reported or not. So we need to identify what are the criterias of reportable segments as well. All right. So let's read it down. Divisions A and B produce and sell to third parties. Is the first condition met? Is the first condition for division A and B met? They engage in business activities, they incur expenses and earn revenues. Yes. Division A produces vaccines and sell them to governments, generating 60% of Dario company's total revenue. Division B produces allergy testing kits and sell them to pharmacy wholesalers, generating 20% of Dario company's total revenue. Division B's long-term average gross profit margin is significantly higher than Division A. Don't you think that for both discrete financial information is also available? First of all, these both parties engage in business activities, they earn revenue and incur expenses. Furthermore, since it is written that division B's long-term average gross profit margin is significantly higher than as compared to division A, that means for both divisions discrete financial information is available, because how else are you comparing these information and concluding that division B performs better than division A? There must be discrete financial information being available. Do you all agree or not? Make sense? And the revenue is also more than 10%. FISA says, and the revenue is also more than 10%. You see, whether the revenue is more than 10% or not is not the criteria right now. Because first you need to meet the definition of an operating segment. Then we will go and decide if this needs to be reported as a reportable segment. These are two separate areas, right? So in the first part, we are just seeing if it qualifies as an operating segment, yes or no. But still, Hadia, still there is at least one condition still to be met. There is one condition which still needs to be met. What is that? Yes, the CODM requirement. Let's see. Examiner says Division C and D undertake research and development. Division C does not provide any research and development services to third parties and only conduct activities for divisions A and B. Division C does not generate revenue from any internal or external source. Is Division B, can Division B be an operating segment? It does not earn any revenue from internal or external sources. That means it's just a department of an entity. It's just a cost center. It's not even a profit center. So if it does not engage in business activities, it's not an operating segment. It's just a department of your entity, just like finance department, just like marketing department, just like compliance department. You do not provide operating segment disclosures for your finance department. That doesn't make any sense, right? So it's purely a cost center from Division D's premises. Division C cannot be an operating segment, that's for sure. All right. It says that Division D performs contract investigation activities for other laboratories and pharmaceutical companies. The external revenues of the division represent 20% of the Dario company's total revenue. Okay. So is Division D an operating segment? Seems to be, at least it engages in business activities, and it has segregated financial information available, because it says that it has 20% of revenue compared to the total. So separate data is being kept, and that is how we know it makes 20% of the revenue on the company. The operating results for division A, B, and D are regularly reviewed by the CEO. One more point. These results include separate divisional operating profit or loss statements, which operational from which operational decisions are made. Costing and budgets for division C are also reviewed by the CEO. So even though the costing budgets are still reviewed for division C, but still division C is a cost center. It does not engage in business activities. So even though research and development budget is also reviewed by the CEO, but still it cannot be an operating segment there, because it does not engage in business activities. Yeah. So do you think A, B, and D are operating segments now? I mean, it's very clear from now. Yeah. So there are four divisional heads who are directly accountable to the CEO, and these heads regularly discuss operating blah 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 blah. The CEO is the chief operating decision maker. In my life, this is an exact replica question that I solve, that is given in my notes, by the way, and that relates to IFRS 8 operating segments. This is the exact replica question. I don't remember the question's name. If anyone could tell me. I have done the exact almost 90%. It's the same. Answers are. I think it's with the name of Clansit, if I'm not wrong. Clansit question. It's exact same replica. So if someone was to ask me that in ACCA are papers repeated, now I can say yes, because 90% it's the same question, right? I can write an answer for you briefly, because the requirement said that whether division A, B, and C or D should be treated as separate reportable segments, we need to conclude on that. And before we conclude, if they need to be reportable segments, we need to conclude that what segments are an operating segment, first of all. So I can say that segments A, B, and D are operating segments in accordance with the above definition of IFRS 8. This is because they all engage in business activities, earning revenues, and incurring expenses. They all have separate divisional profit or loss statement prepared, which means that discrete financial information is available. Now, even though furthermore, they are regularly reviewed by the CEO, who is CODM. However, division C is not an operating segment, despite the fact that separate cost and budgets are prepared and also reviewed by the CODM. But since it does not engage in business activities, that's why it cannot be classified as an operating segment. All right. So I think this is more than enough for the definition of operating segments. The other thing that we had to do was about aggregation and then identification. Maybe first I can do the identification part. That's more convenient for us, right? So let's do the identification of reportable segments part. Identification of reportable segments. Can anybody tell me what were the three possible criterias under IFRS 8? We'll use our two golden words, which are according to. So according to IFRS 8, an operating segment needs to be separately disclosed if it meets any of the following criteria. Let's revise. This is a very golden opportunity for you to revise the complete accounting standard with me at the same time. The first criteria was, if it meets any of the following criteria, its revenue, both internal and external, is 10% or more of the combined revenue of all operating segments. Number two, what was the number two criteria, by the way? Its profit, its profit is 10% or more of the combined profit of all segments that did not report a loss, or its loss is 10% or more of the combined loss of all segments that did not report a profit, right? What was the third criteria? Its assets are 10% or more of the combined assets of all operating segments. Yeah. Furthermore, one further criteria. There is a question, sir, for reportable segments, all of the criteria must be met, or one or two are also okay. Any one has to be met. So first of all, you apply a test of revenue, then you apply the test of profits or losses respectively, and then as a last resort, you apply the test of assets. If neither of the conditions are met, then you say bye bye. If any of the condition is met, then you say hi hi. All right. Furthermore, furthermore, in accordance with uh, in accordance with IFRS 8, at least 75% of the external revenue should be reported in terms of operating segments. If this criteria is not met, then additional segments must be identified, right? In this case, I need to write, in this case, divisions A, B, and D meet the criteria based on revenue, and therefore no additional assessments are necessary. These are all reportable segments, and for which disclosure in accordance with IFRS 8 should be given. Right? I mean, I can further define what type of disclosure should be given. At least I can define some major KPIs that are to be reported, but I'm not doing that right now. Maybe you can do that on your own. All right. So I think everything's complete, but just one area more, the aggregation of operating segments. Aggregation means to include operating segments as one, consider two or more operating segments as one. And you can aggregate certain departments or divisions of the entity when you feel that the nature of the product or services or nature of the business is like with like. Yeah. So sometimes you try to aggregate some small departments and make them as one. So they seem to be like divisions. And when they seem to be like divisions, then you can apply IFRS 8 and check if they meet the reportable segment criteria or not. Right? Yeah, I had that can you explain 75% thingy? It's very clear. According to IFRS 8, when you have identified reportable segments and you are going to report these segments as operating segments, you need to make sure that 75% of the external revenue equivalent operating segment shall also be given. So for example, I'll give you an example just to explain this point. Let's say in a hypothetical world, you had three identified operating segments. Let's say A was, I don't know, maybe 40% of the revenue. B was, I can say, 20% of the revenue. And maybe some other division like D was, and all of this is hypothetical, was maybe 17% of the revenue. So if you include these three, if you sum up these three, 40 plus 10 and 17, these three divisions make up 67% of the total revenue. Now, according to IFRS 8, when an operating segment disclosure is being provided for, then in that case you should make sure that an operating segment disclosure is given to an extent that at least 75% of the entity's reported revenue should be given as a disclosure, and for the rest 25% you can make a heading others, but at least 75 till the benchmark of 75% revenue, you should keep on identifying additional components of an entity. So for example, we did A, B, and C, let's say, and we summed it up to 67%. But sir, this 67% does not meet this 75% criteria. What do? You keep on identifying further segments in the entity. So for example, there was segment B, who was only making 8% of the revenue. Now, Hadia, 8% of the revenue does not meet the revenue criteria. It might also not meet the profit criteria. It might not also meet the assets criteria. But still, this 8% operating segment will be reported separately. And then the rest can be, mentioned as others. At least 75% disclosure should be given. So the basis is based on 10% revenue, 10% profit, or 10% loss, or 10% assets. But, till when do you keep on identifying this operating segment level? You keep on identifying different operating segments up to the extent that at least 75% of company's revenue picture is disclosed separately. Up to that extent, you have to go. Adya, do you get this point? Rohit, is it clear? So this is an additional supporting condition of IFRS 8 that we just discussed, right? Again, these numbers have nothing to do with this question, so please don't get confused. I was just trying to explain. All right. So now let's move on to aggregation. Aggregation of operating segments. Now, while you are identifying I can just write it down. During identification of operating segments, two or more functions / departments of an entity may be aggregated. Aggregated means to sum them up. So for example, I can tell you my own company's example. So let's say my company does a product business. All right. And my company sells one red pen. There is a department which only sells red pen, and there is another department which only sells blue pen. Now these are two separate departments. Both are of the nature of product business. They both do product business, but this department engages in business activities by only selling red pens, and this department only sells blue pens. Now both of these departments go towards the same customer. They both have same dynamics. They both have same everything. This department might be 5% of the total business, and 5% in terms of revenue of the total business entity, and this red pen department may also be 5% of the total revenue, 5% of the total entity's revenue. Now if they are kept segregated, neither this department nor this department would meet the criteria of a reportable segment. IFRS 8 allows that an entity may want to aggregate different department or functions of an entity just to meet the criteria, but that should be based on a sound basis. And what are the basis? I was saying, during identification of operating segments, two or more functions or departments of an entity may be aggregated based on what? the nature and the nature of the business and its products or services, based on the type of customers, based on the types of production processes, with some similar economic characteristics, production processes, similar, economic or regulatory environment. These are the principles, and maybe one or two I don't remember. No, not based on same raw material. Maybe the same cost structure and inputs that are required to build up that asset or that product. But these in general are the requirements which you need to fulfill in order to aggregate different, operating segments as one, while you are testing out the reportable segments criteria. And the first what entities do is, first entities identify operating segments. Then they see if any aggregation is required. And then they follow the quantitative benchmark of identifying reportable segments. That's the whole process. And likewise, if you see the examiner's requirement, it was structured accordingly. Just for the sake of my own benefit, I did identification of reportable segments first, because the case study, the exhibit was so easy. The exhibit was so easy. I mean, anyone could have done it. That's why I did reportable segments first. But otherwise, the process entities adopt is the same. It's in the sequence that has been mentioned by your examiner. All right. So just let me know if you all understand this. So tell me honestly, tell me everyone honestly. Achha, just let me know how many of you actually were in this exam. Is any one of you from this attempt? Is any one of you from this attempt? Nobody is answering. All right. Let me ask you a question, and this is from everyone. Rate your own self, the existing knowledge that you have got, the way that I have taught you, and everything that you know. Use your common sense. If you are attempting this type of a question, with two requirements, part A and part B, part A, very much ethics, 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 part B, very much, not very much, the whole IFRS 8. If you were there in your exam, how much marks should you get? Every individual should answer. All the class will have to answer. Let me know, how much marks do you expect from your own self to get from out of this 20? And I don't want to be too, I don't want you to be very optimistic. I don't want you to be very pessimistic. I just want you to be realistic. Let me know, how much marks would you get as an individual? So Fiza says I would score 10 before this session. Okay. So at least after this session, you can achieve more marks. I'm glad. 15, about 15 marks. Anything which is less than 15 is not good. Just imagine, these type of requirements come in your examination regularly. It might not be in question 2, that might be in question 1 or question 3 or question 4. I can assure you of this fact. I've been, alhamdulillah, teaching this paper since quite a while. And what I have seen in all the papers that have come over the years is that examiner always gives you 15, at least 15 marks, which are, just put on a piece of paper. Anybody could achieve that. It's on the student to, this is a strategic professional exam. You need to find out your own ways. So at the very least, you need to identify where are these type of marks hidden. And you need to make sure that whatever happens in rest of the paper, you need to get these type of marks. You need to score these type of marks very well. Just imagine if some person gets 15 or 16 marks just from this question, and from the 30-mark question that you do on consolidation, even if you get 50% of the marks in that question, So I'm just being very prudent around here. 15 marks from this question, 15 marks from the 30-mark question of consolidation. God forbid, I don't want you to achieve 50 marks from 30. I want you to achieve 30 from 30. But still, just being prudent, 15 marks there, 15 marks from question 2, 30 marks you're already done from section A. Then you have 50 marks of the paper left, and you just need to score 20 more to make sure that you cross the line. I don't want you to just cross the line. I hope and pray to God that you score 101 out of 100, if that's possible. But still, you need to use your sense while going into an examination. Yeah. So when you're attempting examination, whatever knowledge you have, you need to utilize it in the best manner. It's not about doing how many past papers, or being so much addictive to studies or something like that. You have to be mature as well. You need to identify where are the what we call in Urdu, where are the halwa marks hidden, where are the sweet marks. You need to grab those sweet marks and make sure that you clear the exam. All right.